Hi there, Serial Trader here. I'm going to have a look at the major US indices and starting off here with SPX. Let's check in on the wave count. Um, Now we've clearly been in this impulsive move since we had our September into early October correction there. Now I'm labeling that as just ABC down for a fourth wave of some degree. It's very debatable off the March 2020 lows where we're at here in the overall wave count. And there's various ways you can count it correctly. That's why I'm not looking at too large of a time frame here. So let's just focus on this action off of our most recent correction low. Now I think we got the one, ABC expanded flat 2. Now here's where the ambiguity comes into play. Now, is this the wave 3, the wave 4, and we just did wave 5 for a major top? And are we doing a big correction? Or, and is that even possibly, the absolute top of a significant degree? And we're going to do a much bigger correction? Okay, that's certainly possible here. But what I think is currently a little more likely is that, okay, we got the 3, but this is just A, B, C, possibly working an expanded flat wave 4. Okay. And that's a 335 expanded flat wave 4. So this is what I'm kind of currently going with. And because of this, I'm actually eyeing up a long entry. Okay. Now we could do some things here. Let's do a fib retracement if we're calling that our wave 2 low to our orthodox wave 3 high. So we haven't even come down to a 38.2% retracement yet of this proposed wave 3, never mind a 50%. And we could go deeper here. 618, 7. Okay, we can't go. Well, actually, we can. Now, typically, wave 4, would find support in the 38.2% to 50% range, or somewhere in between even. But given that we've had such a long wave 3, we don't technically overlap with wave 1, depending where you place wave 1, and I have it placed here at 43.69.23. I mean, we could actually do a 786 retracement and still not have 4-1 overlap, okay? So this can go deep without actually invalidating the potential of further upside here in a still unfolding impulse wave. So let me just remove that. So it has to go pretty far down to actually invalidate a potential bullish outcome here. So keep that in mind. But to me, the real tell will be if we actually take out the early October low there at 42.78 and change. If we take that out, then I believe we're in a larger degree correction, if not something more substantial, aka crash, right? But no reason to think that that's the case yet. So what I actually currently am favoring is that, okay, we're going to find some support here wherever we bottom out here in this C wave of 4, if we haven't already done so. Now we probably need to spike some lows here to flush people that were buying the dip out and that sort of thing. But as long as we don't, truly break down here, I think it sets up for one more push up, possibly well into December, if not even January, and then maybe we're looking at a substantial top and perhaps a much larger downside move to come. But I'm just not quite seeing it yet. Now, this could certainly change. If we just start absolutely tanking here, relentlessly, then we will have to lean on this possibility where we got 3, 4, 5 in place, possibly for even that larger 5, and we are doing something far more substantial to the downside. Again, not quite ready to go there yet, but I mean, if this thing just doesn't get any support and just keeps tanking, I think we know where to lean on. Okay, so that's all that really needs to be pointed out there. Pretty straightforward. Now, if we go to the Thinkorswim charts here, so daily candlestick chart. Okay, so we've lost the 20-day simple moving average. Obviously, we're well below the T line, and we had a bearish engulfing candlestick here after spiking an all-time high, and then we've had some pretty good downside since then. The next kind of moving average of significance would be the 50-day if we get down there, and that comes into play currently at 45.27. So let's call it low 4500s. So that's really what I guess we're not quite even oversold here on the daily oscillator. So we're certainly not in like an oversold condition just yet. Going off of that measurement. Weekly chart here. Okay, so we do have a substantial weekly bearish engulfing candlestick that engulfs 3 prior weeks, real bodies. So that's a significant, sell signal on the weekly chart. But I will caution, we've certainly seen weekly sell signals that just get obliterated and make new all-time highs shortly after. We've seen that several times on the way up here since the March 2020 lows. But can't ignore this. Okay, this is definitely a potential big bearish sell signal, but needs a lot of proof to take hold. Okay, so that's really what I wanted to point out there on SPX. Okay, now let's go to the Dow Jones Industrial Average. And where are we looking on the Dow? Okay, so the Dow actually looks a little more bearish. It looks like we potentially completed our impulse wave up on the Dow, since we do clearly have overlap occurring here from what you would propose to be the 1, 2, 3, 4, 5 or something. And there's various counts on the Dow. There's even a way you can call this like an A, B, C, D, E triangle. And this was your impulse wave up out of the triangle. I'm not going to worry too much about it because I'm not really looking to trade the Dow hardly ever. But just to mention, the Dow does look substantially weaker and looks like it's really potentially breaking down here. But I will put more weight on the SPX and the NASDAQ. But I just thought I'd point that out. Okay, so, and we've easily lost the 50-day simple moving average on the Dow, closed well below it there. So the 200-day on the Dow will come into play here at 34,315. Okay, now weekly chart on the Dow. Okay, basically we've just been down 3 weeks in a row, but not really a particular candlestick signal to point out there. Okay, that's the Dow. NASDAQ composite. Okay, so this looks a lot more like the SPX to me, where we have our pullback into our early October lows there, and then maybe we got the one. I think it would be the same as S&P 1, A, B, C, expanded flat 2. So 1, 2, 3. Now, are we doing the A, B, C, expanded flat 4? Or did we do the 1, 2, 3, 4, 5, and we're already in that much larger decline? Currently, I'll kind of lean on the outlook there that I'm looking at on the SPX and say that we're probably just doing A, B, C, expanded flat 4, and then still one more push up to go to new highs. But willing to change my mind if this thing just keeps tanking down, right? But currently I'm kind of eyeing up a long position, if anything here. So we'll see how that unfolds. Weekly chart on the NASDAQ. Again, the same as the S&P. We got a weekly bearish engulfing candle, engulfing 3 prior weeks, real bodies. So that is a potential significant weekly sell signal, but again, has a lot of proving to do because we've seen plenty of these weekly sell signals just get absolutely destroyed in short order. And this could easily happen again. Okay, and I'll just point out seasonally, you would normally look for a big push up in December. It doesn't have to be for any particular reason. It's just the seasonal tendency of, I don't know what it is, maybe fund managers, chasing all the way into the end of the year, and then they finally, are at liberty to sell in January or February. Whatever the reason behind it, it doesn't really matter. There just is something to realize that, yes, there's a tendency typically to be quite bullish into December, right? Now, we've certainly seen exceptions to that, but those are exceptions. So I like to have the wind at my back as far as seasonality. So that makes me more inclined currently to think that we have another push up to come, unless this thing just really proves it to the downside. Okay, so that's the NASDAQ. VIX, obviously a big move up in VIX. Now, I will also put a caveat here. So this all occurred on Friday, which was the day after the market was closed for Thanksgiving, and it was only a half day of trading. So how much meaning can we really assign to price action that occurred on like a shortened trading day with what you would assume is, you know, limited participation by normal, you know, big players and market participants. I guarantee lots of big boys were already on vacation, weren't even looking at the market, or maybe they thought they were looking at the market until they saw some, you know, big numbers happening, because it was a substantial day, despite being a half day. But I'm just saying, we'll have to see how things trade, you know, into Monday and early next week to really get a handle on where we're at. I don't quite trust, you know, a big reversal under those conditions, but we'll see. But yeah, VIX certainly big gap up, closed near the highs of the day. Although we're really, in the bigger scheme of things, didn't really spike up that much on VIX. We're just at kind of prior spike high levels. And if we were to kind of top out here and just begin reversing, that's probably just another, you know, buy the dip signal here on VIX. Again, we'll see how things play out early next week to get a better handle on what's really going on here. Okay, now just to finish up, the VIX VVIX tool. So currently on a sell signal, obviously. Now, interestingly, there wasn't really much of a telegraph here as far as a VIX VVIX divergence. VIX and VVIX both basically made their local lows around the same point here, and then roughly had a similar, you know, trend before they both spiked up. So there wasn't really much of a divergence between VIX and VVIX. Although, I will point out there was a divergence between SPX and both VVIX and VIX, in that SPX made a new high over here, whereas VVIX and VIX made new lows way before that, and weren't anywhere near making new lows when the market was still, in fact, making a new high there. So I guess that was a bit of a divergence there between those two and SPX, just not between those two themselves. Anyways, VVIX clearly above the red moving average, SPX clearly below the blue moving average. So on a sell signal for now, but again, at this point I'm kind of looking for a long entry, if anything, unless this thing really gets carried away, and then I'll kind of scrap that idea. But I think that's currently the thing to focus on until we're given a strong reason not to. Okay, well, that's good for that. Should have a couple more videos coming up here soon. All right, Serial Trader signing off.